What's going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. And sun's out, guns out. Just felt like throwing on a sleeveless shirt. Do this video. It is hot over here in the 440 Ohio. So I told you I was going to make a decision, and I did sell that business development company, and I did buy 2 dividend growth stocks. With selling it, it was totally worth it. I cannot wait for the Yieldmax ETFs passive income to cover that. Going to be a interesting ride with these 2 dividend stocks because they're some of the best dividend growth stocks out there. I had to make a move. I had to focus a little bit on dividend growth. I did add some Yieldmax ETFs, which I'll go over, since M1 Finance now has them, to buy them. So I'm going to use their income to buy these 2 dividend growth stocks for sure. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out these 2 dividend growth stocks right now. The first dividend growth stock I'm going to go over is UnitedHealth Group, sitting at 503.12. Dividend yield of 1.49%. Remember, that's still not a bad range. PE ratio 30.70, average volume 3.29 million, market cap is 463.06 billion US dollars. Year range is 436.38 to 554.70. Day range is 498.80 to 509.10. So a little bit of volatility, which is interesting. Previous close is 505.49. And look, past 5 years, it has done very well against the S&P 500. So people like SPHD ETF and stuff, but is actually beating the S&P 500, which is very impressive. So again, they are a big health insurance company, big company. They generate a lot of revenue, and I'm going to go over their revenue trends and dividend history. There is a huge demand for healthcare, and you could see exponentially the revenue trends have been fantastic with UnitedHealth. Annually in millions US dollars, 2013 122, 2014 130. This is 130,474. This is annual in millions US dollars. That is a lot of money. 2015 157, 2016 184, 2017 201. 2018, 226,247, so it's just going up. 2019, 242, 2020, 257, 2021, 287, 2022, 324, and 2023, 371,622, and that is annual data in millions of US dollars. That is huge. That is, wow. That is incredible. So we're going to go over a few more things. The earnings per share was a little bit down, but I'm not too concerned. Look at this jump it had, and it had just one little itty-bitty drop, okay? Quarterly, it's pretty good. Again, the earnings per share is, just look at that slope going up. Sure, it has a little negative bump, but I'm not too sure that that's going to be always down. So the quarterly growth, slowly going up. It's a lot of greens versus reds. So going up there, again, the earnings per share ending in March 31st, 2024 was minus 1.53, a 125.71% decline year over year. Big deal. There's been an increase year over year. The earnings per share for 12 months ending in March 31st, 2024 was 16.38 or $16.38, a 25.07% decline. But the trends have been fantastic, and they've been going up. So I'm not too concerned about that. You have one little bump, and people are panic selling. I did see people panic sell that, making some post on X. By the way, follow me on X at Darth Dividend 23. But they're just too powerful. So I had to go in. And I'm going to show you a few more things. They have a pretty good stock split history as well. So 1992, 2 for 1, 1994, 2 for 1, 2000, 2 for 1, 2003, 2 for 1, 2 for 1, 2005, 2 for 1. So it's getting up there. So again, there's no guarantees that they're going to stock split, but again, it's pretty nice looking at their trends. So I'm hoping long-term wise, you own a few shares that you start seeing some stock splits. That'd be fantastic. I'm not going to say no if that happens, because I can tell you I have NVIDIA in my IRA, which I'll probably reveal to you eventually. Made some changes with that, and yes, I did buy NVIDIA in that, and I'm very happy with that because they're doing a stock split. Now it's going to be interesting with NVDY to see what happens. So I've been asking some questions, and I'm hopefully going to get some answers with NVDY, because NVDY is doing phenomenal right now because of NVDA or NVIDIA. So let's jump to the dividend history. This is what I like about them. And the dividend growth has been phenomenal. So let's start in 2010. It was 13 cents, 2011, 16 cents, 2012, 21 cents, 2013, 28 cents, 2014, 38 cents, 2015, 50 cents, 2016, 63 cents, 2017, 75 cents, 2018, 90 cents, 2019, 108, 2020, 125, 2021, 145, 2022, 165, 2023, 188. They have a pretty low payout ratio according to Zacks, 29%. That's good. That's healthy. Number of dividend increases in the last 5 years is 5. Dividend growth in 5 years, 14.27%. If you bought one share, you made $7.52 with a 1.49% dividend yield. That's still pretty nice. Low payout ratio, above 1% with a dividend yield, and the dividend growth is phenomenal. So I went in there, bought them. I sold Triple Point Venture Growth, the BDC. That BDC improves, sure, I'll throw it on E-Trade. But I want to show you the other dividend stock or growth stock that I bought, which is Visa, sitting at $274.50. In the past 5 years, it's been in line with the S&P, beating them slightly, starting to catch up. Its dividend yield is 0.76%, and I'm going to explain to you my rationales as to buying them. PE ratio 33.71. Average volume 7.37 million. The market cap 549.27 billion US dollars. Year range is 221.02 to 290.96. Day range is 272.02 to 274.93. Previous close is $272.25. So I'm going to provide some rationales as to why I'm buying Visa. I'm on motleyfool.com. I'll give you the reference in a second. But I'm going to just reflect on this article. Anyone who follows the industry knows how much blame gets put on the so-called interchange fees. However, as we see, they serve as a valid purpose. Visa and MasterCard have the power to default interchange rates, but the merchant and consumer banks can negotiate their own terms if they choose to. On the other hand, Visa and MasterCard, which operate the underlying payment networks that connect all the different stakeholders, collect what's called an assessment fee, roughly 0.15% of a card transaction. This is a tiny part of what the merchant pays. Given the last 3 months of 2023, Visa handled 3.9 trillion of volume and MasterCard handled 2.4 trillion in volume. The assessment fees can add up to tens of billions of dollars in annual revenue. So I'm going to refer that to, thank you, Neil Patel, for that reference. Very good reference. So think about that. You swipe your card, they make money, and the bank makes money. So like I said, FNBO, Visa makes money, FNBO makes money. And I make my payments on time. I have my settings so that I don't have to pay any interest. So I use that for a gas card and I get a discount. So they're making money. So let's jump to their revenue trends, and dividend history. So here's the thing. I consider us in the digital age. You can correct me if I'm wrong, but everything's digital. Digital this, digital that, digital wallet, this. So we're using these cards. They're making money. Now look at this annually in millions US dollars. 2015, 13,880, 2016, 15,082, 2017, 18,358, 2018, 20,609, 2019, 22,977, 2020, 21,846, 2021, 24,105, 2022, 29,310, 2023, 32,653. This is annually in millions US dollars. You see the numbers with UnitedHealth Group, which is sky high. This is still trending upwards. So they're generating money. They're very unique in how they generate money. Think about it. You swipe your card. You have a card with Visa. They make money. And then guess what? They pay us the dividends. So let's check out their dividend history. So let's look at this. Quarterly dividend. In 2015, it was 12 cents. 2016, 14 cents. 17 cents. 2016, 2017, 17 cents. 2017, I had to slow down because it's jumping up fast. 2017, 20 cents. 2018, 21 cents. And then in 2018, 25 cents. And then in 2019, 30 cents. And then in 2020, 32 cents. And then in 2021, 38 cents. And then in 2022, 45 cents. And then it looks like there's just a one-time issue in 2023 where it was 40 cents. That appears to be not really, it doesn't worry me at all. And then in 2023, 45 cents, and then in 2024, 52 cents. So the number of dividend increases in the last 5 years is 6. Payout ratio is 22%. Dividend growth in 5 years is 15.25%. If you bought one share, you made $2.08 with a 0.76% dividend yield. So again, I like some of the higher yielders with really good dividend growth, but I had to switch it up a little bit. I had to add Visa. It was time to buy them. Love dividend growth. Dividend growth wins over time. Remember the high yielders, that's great, but dividend growth always wins. So it's important to have, for me, I make sure that I have high yielders and really good dividend growth stocks like them, like Visa, like Starbucks, like Kroger, like what else would I consider a really good one? Starbucks, Kroger, UnitedHealth Group, Prologis, that's a REIT. See what else do I have that's a pretty good one. Probably say Truist Financial Corp, another one. So you see where I'm going. Got to have a good balance because you can't just always rely on high yield. I'm like maybe 50% high yield, 50% dividend growth. I mean, I've got to have my philosophy, my dividend investing strategies. You got to have high yielders. I mean, you're not going to afford all these shares of Apple. You're not going to afford all these shares of Pepsi. You got to have some high yielders. That's what I do. This is what I do. I'm not giving financial advice, of course, and I have a disclaimer at the end. So I did buy them. Told you I was going to potentially do it. I kind of gave some hints on yesterday's video, and I absolutely love what I did. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will have a video for you this weekend, but hit that notification bell so you don't miss future videos. I may try to squeeze in a video. I may try to squeeze in some shorts. Take care and have a good one. So as a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. This is strictly for entertainment purposes only. Yes, I did buy shares of Visa and UnitedHealth Group. I plan on being long in those two dividend growth stocks. Investing is a big risk. You can gain money, you can lose money. So be aware of your investments and do your due diligence. But most importantly is best to seek financial advice from a financial advisor or somebody certified to give financial advice. And for tax purposes, a tax advisor for tax purposes. Do not use my YouTube channel for any form of financial advice or for tax purposes. Okay, just want to make it clear. This is my dividend investing journey. I'm very transparent about my buys. This is for you. This is my investing journey. You take care and have a good one.